LiteFinance, the world of financial freedom.
Hello, it's Monday, 1st of May, and in many countries there are some holidays and most of the people are traveling. But I tell you this, don't be tempted by the beautiful weather, because this week might bring the best opportunity we've seen in months. So let's begin with the calendar as usual, where today we will get manufacturing PMI from the US. Next, on a Tuesday, manufacturing PMI from Great Britain and Eurozone, along with the preliminary CPI reading from Eurozone. On Wednesday, we will get services PMI from the US, crude oil inventories, and most important event of the week, which is the FOMC rate decision. On a Thursday, we will get services PMI from Great Britain and Eurozone, and we could say the second most important event of the week, which is the ECB rate decision, where, the same as in the case of the Fed, the consensus shows that we should get 25 basis point rate hikes in both cases. Finally, Friday and non-farm payrolls from the US. So, as you can see, this week is filled with the key data publications that potentially could trigger trend changes on certain assets. So, let's dive deeper into some analysis. And although unpleasant news for investors come from Europe and the United States, stock indices are growing, unlike Euro-USD, which once again experienced strong fluctuations. Disappointing Eurozone GDP and German inflation data pushed the pair to the lower end of the trading range of 109.75 to 110.55. However, the PCE slowdown and disturbing news from the First Republic brought the dollar down. Eurozone economic growth was weaker than expected. Compared to the first quarter of 2022, it increased by 1.3%. So this is less than the Chinese 4.5% and American 1.6%. Investors expect the European Currency Union to continue to strengthen during the rest of the year, while the US approaches recession, which will allow entering Euro-USD purchases. Hedge funds pushed their USD net shorts to the highest level since June 2021. The market believes that history will repeat itself. Since the end of each of the previous Fed lockdown cycles, the S&P 500 has gained an average of 13% per year. So why doesn't it rise now, when the labor market is flourishing, consumers are strong, and the Fed has expanded its balance sheet due to a $400 billion bank bailout? QE has made the rate hike process less efficient, which is the main risk. So what if the US inflation suddenly accelerates? The monetary tightening cycle will have to be resumed, supporting Euro-USD bears. But what if the energy crisis in Europe has not ended, but is structural? Due to the Fukushima disaster in 2011 and Japan's gradual abandonment of nuclear power, the yen collapsed by 40% within a few years. However, concerns about the US recession and the Fed's dovish reversal outweighed. First Republic must sell assets to go bankrupt after SVB and the Signature Bank. It will be the second biggest crash in the US history after Washington Mutual in 2008. Problems with increasing deposit fees are causing non-financial profitability spreads to exceed those of banks. This results in a reduction in lending and slows down GDP. In such circumstances, the Fed is likely to raise rates for the last time in May and remove the phrase about some additional monetary tightening from the text of the accompanying statement. So the ECB will not stop, leading to a decrease in the yield spread of US and German bonds and to the Euro-USD growth. Each of the opponents has vulnerabilities. Whoever hits them first wins. Euro-USD will choose a further direction only after leaving the consolidation range of 109.75 to 110.55, while the chances of false breakouts remain high. So stay out of the market before the Fed meeting or take a risk. Okay guys, that would be all from my side. Thank you for watching and till next time.